let us come to some important definitions as given under Accounting Standard 3. The first one being cash. Now what is cash? Cash here implies hard cash, that is currency, and the money that is there in banks in terms of deposits like demand deposits or bank accounts. So that means cash includes hard currency and the money that is kept in bank accounts. Then we have cash equivalents, a very important concept. Now students, cash equivalents are short term, highly liquid investments that are readily convertible into known amount of cash and are subject to an insignificant risk of change in value. So students, this definition makes it very clear that they are highly liquid short-term investments. Short-term investment means they can be converted into cash within a period of 3 years and are highly liquid. That means readily convertible into cash. Then the amount of cash is almost known to us and it is subject to an insignificant risk of change in value. That means the amount that is known to us is bound to change but very insignificantly. So now students, that brings us to a very important question. How are cash equivalents different from liquid assets? Liquid assets can also be converted into cash within 3 months, but cash equivalents are also, as per this definition, appearing to be the same category. Now students, a very important point to remember here is that liquid assets and cash equivalent are different on one account, that is the known amount of cash and the risk of change in value. In liquid assets, there is a significant risk of change in value, whereas in case of cash equivalents, this risk is insignificant. So what are the examples of cash equivalents? The first example can be bank, commercial paper, it can be treasury bills, they can be in the form of bullion also, precious metal, it can be like foreign currency, foreign exchange. All these and many more things are categorized as cash equivalents. Remember, they are highly liquid short-term investments which can be readily converted into cash or known amounts of cash and are subject to an insignificant risk of change in value. The next definition is operating activities. So what are operating activities? They are principal revenue producing activities of an enterprise. So now students, they are the activities which are responsible for revenue generation in a business. They are the primary activities of this particular enterprise and they should not be of investing or financing nature. Then we have investing activities. Investing activities, as the name suggests, they involve investment of funds. So they are the activities which involve acquisition and disposal of long-term assets. Long-term assets means fixed assets. So if the funds are invested in fixed assets or the fixed assets are liquidated, that is, we sell fixed assets. In these cases, it can be categorized as investing activities. Like for example, let us take a few examples regarding this. Sale of land. Land is a fixed asset. Its sale can be categorized as an investing activity. But in case you are a property dealer, then the sale of building would be your operating activity. Why? Because when you are in property business, selling and purchasing the property is your primary activity. So in that case, it becomes an operating activity. But otherwise, purchase of sale of building would be categorized as investing activity. Then we have financing activity. Any activity which results in change in the size and composition of owner's capital and the borrowings of the enterprise. That means any activity which results in the change in the capital employed in a business. We know what capital employed includes. It includes shareholders' funds and long-term loans. So any activity which affects this composition, that is the composition of share capital and the long-term loans, can be categorized as financing activities. Remember, it also includes activities which are directly related to capital and long-term loans. Something like dividends paid, interest paid. These activities are directly linked to capital. Hence, they are also categorized as financing activities.